The union budget is around the corner. What could be announced and how will it impact the market? UBS comes out with a key report. UBS thinks the impact of the budget on the stock market would be muted as the capital expenditure and consumption boost could be limited in this time around. But what does UBS estimate the government could announce? We bring you what UBS expects in 5 key aspects. The first one's, of course, the impact on the stock market. Government's fiscal deficit, which occurs when the government's total expenditure exceeds its income. The third aspect would be infra companies to be impacted in this key budget, changes in the capital market structure and taxation, and finally, what government companies could be divested this time around. Now, UBS feels that the budget might not boost the market as the expenditure on consumption as well as capex might be lesser compared to the previous budget. Now, this time it is assumed that if the fiscal deficit is contained at 4.5% of the GDP in 2026, it could of course be a shortfall met by borrowings. Apart from this, UBS feels if the capital expenditure for 2026 is budgeted at a similar levels of rupees 11 lakh crores, similar to the FY25 budgeted capital expenditure, it could be negative for companies like L&T as well as the other core infrastructure companies. UBS also says the importance of domestic orders for the infrastructure companies is now higher given the limited overseas opportunities, especially in the Middle East. In this regard, UBS thinks companies exposed to private emerging infrastructure and power value chains are relatively better placed given the private sector capex growth remains in the double digit. Now, UBS also does not expect any changes in the tax policy, especially for the capital markets in their base case estimates. UBS also expects the administration to maintain a lower target for divestments of around 30,000 crores for FY26. UBS's revenue collection estimates are marginally improved in line with the nominal GDP expects, and the gross tax revenues will be in a growth phase of about 11.5 to 12% in FY26 versus about 10.7% on a year-on-year comparable basis between April and November of 2024. In terms of divestments, as mentioned, the target is around 30,000 crores for FY26, which is lower than the 50,000 crores estimated for FY25. From year to date until FY25, the government has only fulfilled 9,000 crores in terms of divestment versus previous targets of about 50,000 crores, and UBS expects stake sales by the government in companies like NMDC Steel, IDBI Bank, Shipping Corporation, and BEML as the likely candidates to be pushed forward in FY26. What do you think of these particular measures, and do you think the government will lower the capex or increase it in this particular budget? Let us know in the comments below and follow NDTV Profit for more.